You talk to a lot of the big institutional investors, things like pension plans in Europe and the United States, as well as the fund managers that invest their funds. What are you hearing in terms of a divergence, possible divergence between Europe and the United States?
Well, there's incredible frustration of U.S. pension funds because they understand that this is actually bad for business and particularly bad for their investors. And we're already seeing that in some conservative states where there's proposed anti-ESG legislation. Some of those even Republican pension fund managers are pushing back and saying that it's going to cost their pensioners billions of dollars, both in fees to convert and to pull out of investments, but also in losses over the next few years. And the reason for this is that if the United States businesses don't start investing in the technologies that are going to abate greenhouse gas emissions and also adapt to a warming climate, we are going to be losing out as a country and as an economy because Europe and Asia, and particularly China, are investing in these technologies because they understand that climate change is very real, that human activity and fossil fuels are major causes, as well as some of the ways we grow our food and use other technologies. And so they are now already converting their energy systems. They are investing in battery storage, electric vehicles, electric stoves, and other things. And the United States business, if there is a chilling effect by this anti-ESG legislation, it's business that's going to lose out, and also consumers and the economy in general.
Before you even get to the investments, you can talk to just about talking about it, because we're having difficulty sometimes getting people even to come on and talk about the issue because it's so politicized. And there's actually partisan politics going on with people's houses. They're sending up picket lines to people's houses. Are you having a difficult time getting even people to discuss it publicly?
Yes, businesses, I mean, I have been, I'm also was a corporate lawyer, and I've been speaking to some of my former partners who are representing companies and who are basically afraid to talk about the fact that these investments are good investments. I mean, over the years, investing in new technologies has driven down the cost of solar and is driving down the cost of battery storage. These are very good investments, and they will actually lead to economic growth. The other thing is these businesses know that they have to also, they have to address climate change because they have to address the risk of climate change. We already know that even this year alone, we've had $7 billion climate weather events. That's what NOAA calls them. They actually caused over $1 billion worth of loss and damage to businesses and to people in the United States. And those instances are rising tremendously over the last few years. And so that is another thing that businesses want to do. They want to make profit, but they want to avoid cost, obviously. And so that's a risk that they are also looking at. And I would also say that, interestingly, Norway's sovereign wealth fund is really taking that risk seriously. They're basically saying that they're not going to invest in companies that don't take mitigation of climate risk into account when they're making investments. They will actually disinvest from those companies, is what they're saying in a statement.
Eileen, when we talk about ESG, I'll plead guilty to this. Often I think about the E, the environmental, some of the climate issues you just talked about. But there is an S and a G as well. And it does strike me that one of the issues that is really involved here, and again, it's become very political, is diversity, equity, and inclusion. To what extent are we having difficulty taking that into account in talking about in making investments?
Well, that too has become incredibly politicized in what's known as these culture wars. And again, too, DEI and training on DEI, and there's a lot of legislation that says, we don't want business to invest in diversity, equity, and inclusion, in hiring diverse people, arguing that it's actually bad for business, that they're less qualified, and also not to invest in leadership training, inclusive leadership training, that is a cost that they should avoid. That's actually also counterfactual, because the facts show that when you have a diverse workforce with inclusive leadership that listens to those employees, that takes into account their views, you actually add value to the company. You actually create better outcomes on decisions because of the diverse viewpoints of those people. So again, that's another thing that is really counter to the facts. So the argument that that's bad for business is actually not true. In fact, DEI and inclusive leadership training is very good for business.
So finally, Eileen, I want to come back to your day job. What are you doing at Rockefeller Foundation to address these issues?
Well, we're actually using, one of the problems we have in addressing climate change, there is a huge capital gap in what's needed from public funding, philanthropic funding, and private funding in enabling countries, particularly in developing markets, to transition to sustainable energy systems. And unless we actually can decommission coal plants in some of these developing economies like South Africa, India, Vietnam, and Indonesia, we're never going to keep the warming of the climate below 2 degrees Celsius. And above 2 degrees Celsius, it's really catastrophic effects.